All righty. Welcome, everyone. Welcome to the Hurley Investments Market View Commentary for Monday, the 4th of April. I've got some interesting things to show you here that are going to, I think are going to make you go, huh. Things you're going to think about, things that you might want to consider, things that maybe you haven't thought before. So, Wall Street closed out the worst quarter in the financial market since 1938. We missed it being the worst quarter by about 4.5%. At one point, we were down as much as, 34.8%? And we finished off down, 21, and I guess 25 was the worst quarter that have happened. So plain simple, second worst quarter in market history, and we're all still alive. That's the short answer. But this made me think, for the second worst quarter in market history, what was done through that quarter? And the short answer is, I think we need to talk about it. What was done through that quarter by anyone that's managing your money, right? If you had mutual funds or any funds, you sat through it with the opportunity to dollar cost average with whatever new funds or reserve funds you had in the account. That's simple, right? 401ks had money to put in the end of the quarter or beginning of the new quarter, which means you obviously would have missed that 34% down, right? Most high yield bonds lost 25%. Most new issue bonds now hold the lowest yields in market history. I mean, they're not a lot of good answers. Spread trading, commodities, currency, hedge trading, all got their butts handed to them. That doesn't mean everything was bad, though. It's actually 100%, but 50% short trading did awesome. And gold was up roughly 10%. So if you flat out shorted the market, if you're a Bill Ackman, you did really, really good. You killed it. Or you could have been with Hurley Investments. And Here's just a general idea. We added shares 100% paid for on Boeing, on Apple, on Ford, Facebook, Disney, Visa. We did Under Armour last week. Keith, type in something I might have missed here. Boeing, Apple, Ford, Disney, Facebook, Under Armour. AOBC had shares added to it. Micron had shares added to it. And I think that's going to be about my big shares added. It might have been some other ones. Baidu, thank you. Baidu the week before. And we still do have some expiring here on the 9th. Taking a quick peek on some of these. So we dollar cost averaged leaps on Boeing, Apple, Disney, Ford, Facebook. Visa we really haven't. Under Armour and Baidu. And we still have to reset new Visa leaps and stock ownership positions. So we have a lot to do. A lot is still there that says, hey, we've got to get on it. We've got to get moving. But there comes to be a question, right? But there's a question. There's the timing. Thank you, Jeff Schaffner, by the way. The timing. When are we going to do it? How are we going? So here's what bothers me. What bothers me is mathematically looking at us being year to date and from the highs and the lows and everything, we were down right at that 34.8, 35% range, which means our year to date is roughly right on the 100th of a percent, 50% retracement. Why is that an issue? Why is that an issue when you see the year to date basically up almost perfect median half mark on that loss? What do you think? Bingo. Awesome, Lance. Kevin, it's a 50% retracement, which means at this point, what? Go ahead and say it. When you have your 50% retracement, what does that usually mean? I already said that once there, so Lance, you're going to repeat me, but I think you know where I'm going with this. There you go. So Lance says, and you're right, after a 50% retracement, people are grateful that they've made up half their losses and they sell out. So it's the sell-off, right? We could not have hit at a worse time. Today, our markets are up based on one damn day of the new active virus-infected people going down. Or the 9% drop in oil prices with Saudi Arabia, Russian, OPEC meeting being pushed to Thursday now. I mean, there's no good news here. 33,000 was the highest. Let's take a quick look here. We're at 29,004 or whatever. Yesterday we're at 25. So yesterday we went up to like 33, maybe 31, came down to 25. So the call has been made that we've peaked. The call has been made that we peaked. And I'm sorry, I don't see a peaking in the total cases yet. And if you look more like this, one day down doesn't mean that we peaked. Doesn't mean that we're plateauing. In fact, what we're really looking for to have a realistic understanding, what we're looking for in a chart is this. We're looking for it to go up, we peak, comes down and it tests, we peak, and these are lower lows and lower highs. Come down, come down, come down, and then we plateau. This is the chart pattern we're looking for. This means that we're going to be in the clear. This is what's going to make the difference for our economy. Let me bring in a couple that are difficult to understand. Well, it's, where was it? Kevin, we're probably more like Italy. We are. We're just 6 times bigger. I like how logarithmic it is plateauing, right? Little different than linear, but we do have a slowing down. What really matters is right here. This is in the process of plateauing. Up, lower lows, and lower highs. But we don't know in real life how many more humps along the way we have, and if this will be another 6 to 8 weeks here. We are probably closest to Italy in how we get out and how our populations react. Some people said, well, Kevin, why don't you compare it to China? And with all due respect, that's a perfect linear plateau, right? That is plateauing. Guess what? It looks like a plateau. It doesn't look like a damn mountain, people. I kind of want to shake some of these people that think, oh, we're plateauing. That is what a plateau looks like. It doesn't look like a mountain. It will look that way, linear or logarithmic. Either way, that's what a plateau looks like. It goes up like a hill. It's a flat piece of land. It then goes down again. Look at those cases and those spikes. If you ever wanted to call BS, there you have it right there. Your daily new cases. I can't believe how the Chinese think that people actually believe them. So we're obviously not following China. And the scary part is if you look over in Europe where this can really take off, I'm going to go the UK, or let's go Germany. We'll do Germany, France, and the UK. Total cases, it's not plateauing. It looks like it's starting to slow down, but it's not really plateauing. Interesting, if you say anything, lower, higher, it almost looks like a double top, right? But how many more lowerings do we have to go to till we really hit the plateau? So we're not necessarily plateauing in Germany yet. A little too soon to call it a plateau. It does look to be getting better. France. Wow, huge jump. It's plateauing. We're good. Oh, crap. Huge one day up. Looking at new cases, maybe China's not so wrong. Huh. Interesting to see. Brings me to a little confusion, right? And then the UK. Not plateauing, not plateauing. Yeah, we had people 2 weeks ago calling this the plateau. Those are the same people that think one day makes a trend. Definitely not plateauing. Worst total number yesterday. So when you start to hear people talk about plateauing, just pull up, go to Worldometer coronavirus, right? And then go pull up China. And then show them what a plateau looks like. In fact, if you need to, you might have to go to Google Images. And then type in here plateau. It's really kind of a unique way to spell it. And maybe pick out a couple pictures, you know, say, hey, I'm going to call that a plateau. I'm going to call this rising, and the plateau comes right there. Hey, look, there's a peak. Plateaus are long times when they're flat. Maybe it's time to teach some of these doughheads that are on TV what a plateau is and what it really, you know, what it really looks like. So, all bad news, and we hit the 50% retracement on the 100th of a percent. If I was to take a peek at the charts, man, we almost have our crossovers. We almost have our crossovers. Got it, got it, got it. But we're now in oversold. We didn't get it on the RSI. And look at this volume through March. The volume would suggest that, plain and simple, the volume would suggest that we're overbought and that institutions just blew their wad, is the best way to say it, right? They just blew the money they had saved, the new money coming in. It's spent. I don't know if that's exactly the halfway point, but there was our pivot point last month, and we just went above the main pivot point on the Dow. Now, not that the Dow is that important. Yes, it's still bearish, just by a smidget, because we haven't had our overall RSI indicator cross. But we almost have it right here. And again, we're looking at our highs. I guess our highs are in February, right? 33.97, 21.91. I'm just going to take my my calculator here. I'm going to add those two together. Doing it on my phone. 33.93 plus 21.91, 55.84 divided by 2, 27.92. 27.92 would be the technical midpoint true 50% retracement. Makes you wonder, doesn't it? So as we're looking at everything, and we're looking at charts, and as we're going through our Monday morning sales meeting, what's happening, what's going on, still bearish, overbought on the Williams percent R, big money spent a ton of money here. And so the question that we come up with over and over again, is this a bear market? I guess it wouldn't be a dead cat bounce, right? Is this just a bear market retracement before the next leg down? Well, Kevin, you guys did so well in 2008. Yeah, in 2008 for 4 months, everything went straight down. It was really pretty easy. April on through to July, August, September, piece of cake. Everything went straight down. This is a little different. If you're going to ask me where our markets will go this week, boy, I've already looked at futures, and futures look good. Futures look really good. Especially after having such a big day to the upside. Up 13.5%. It looks like we might get another up day after a more than 5%. We've had 7 out of 8. 7 out of 8 have been down. But man, makes me wonder. It just makes me wonder. Mathematically, anyone that studies statistics, it's got to get worse before it gets better right now. I mean, we're seeing it. 31 or 33,000 is our worst one yet. We're not plateauing yet. The numbers just went over 30,000. Yeah, and we still might hit our worst day yet today. I had Jeff Schaffner tell me, well, we're going to be in a recession. And I said, whoa, 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 hold on. We've got to go 2 quarters with negative GDP. Well, Kevin, we could go into recession. I'm like, whoa, 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 Jeff. I wouldn't count on it. Now, well, and I then would have said, hey, we've got stimulus coming. We're going to be fine. Now, I still think we're going to be fine. We won't be in a recession, but our economy has taken a hit. And wow, I'm shocked to see Samsung beat their numbers here this afternoon when they reported. I think we're going to get some passes, but the question is, what are we going to do? Where are we going to go? What can you start to maybe load up on? We finished so perfectly today at only being down 17.55%, even though we're coming up with a 27.92 as a true median. We've made back half of the losses that we've had this year. I would tell you our markets are probably going to end higher this week. It's going to end higher because it's Palm Friday and the markets are closed. Wednesday might be our one sell-off day, and then you'll have retail money in on a very low volume day on Thursday. In all honesty, guys, look at the markets tomorrow and Wednesday, and then whatever happens on Thursday doesn't matter. If it's a big down day or big up day, it'll most likely be reversed the following Monday. So you don't need to pay any attention to that. Very low earnings, Delta Airlines on Thursday. Not a whole lot by way of economic reports. I went internationally, and I kept this up to show you guys. As I took a look at this week, Japan really doesn't matter. When I look to the Australia rate decision, doesn't move the markets, even though it's in red, right? Even though it's highlighted in red as important, it's not important. It won't move markets. Canada, not much there. Again, more Japan. Japan hasn't moved markets in a while. Wednesday, Japan. It has the FOMC minutes on Wednesday. I guess I should have put that in. I just didn't see that as a market mover. I should always have it in ours, but it's not something that I stood out and went, you know what? I've got to warn you guys of that. And then there was just really nothing else throughout the rest of the week. I did see some more reports, though. Let me make sure that this didn't just reload. I don't have everything that I thought we needed to have here. This week, Monday, Tuesday, Thursday, the Bank of Japan Governor Kuda's report on port Great Britain's manufacturing, it's not market moving. This is what I was looking for. It's actually, there we go. That's US. No, we should have 2 more rate cuts. OPEC meeting. There it is on Thursday. It's not a rate cut, it's an OPEC meeting. And then on Friday, China. Just not really anything that stands out that's going to move anything. So, how am I looking to trade? I'm to the point that new money, even if we need to add protection, has to be in place. And if we get down to being only 10% down, I have to take protection off and let stocks run. It'll be interesting. Next week is when things get interesting. Next week, we start that first week of earnings. Carnival Cruise Lines on Monday. In fact, why don't I do that? Why don't we just take a peek? What's going to matter? What's going to move us? Nothing this week. Unless we gain another 7% tomorrow, then I'm going to be wrong. But nothing's going to move us this week. The big move, the sustained move, will be April 13th through the 17th. Carnival Cruise Lines, Lunkin Coffee got crushed, lost 80% of its business. It's down to nothing. But then we have Fastenal, First Horizon National, Johnson & Johnson, JP Morgan, Wells Fargo, PacWest Bancorp, Interactive Brokers, United Airlines. We start our airlines and we start our airlines on Friday or on Thursday, right? But we start airlines this week going into the next week, on Thursday going to next week, and we start our first round of banking statements coming out, primarily on Tuesday, right? Wednesday, Bank of America, Schwab, Citigroup, Morgan Stanley, all the big ones, US Bancorp, all report next Tuesday and Wednesday. PNC reports, United Healthcare reports next Wednesday. Bed Bath & Beyond, E-Trade, Las Vegas Sands, Texas Capital. Thursday, Abbott Labs, BlackRock and Blackstone, BNY Mellon, kind of a big one. Dover for Energy, poor guys. Honeywell, Key Corp, Snap-on, Rite Aid, not market movers. First Financial, Skechers. And then on Friday next week, Citizens Financial Group and Schlumberger. So really, we're starting into the big banks next week and a little bit into, some retail, some energy. It'll be an interesting week next week. What will matter is if we can get some of these numbers to come down in regards to showing a slowdown. If we could do some banks with some good numbers and get this back down to 20,000-ish, that would be amazing. I don't see it. I still think we've got to have till the middle of April. This week and next week is before we'd see the earliest of the slowdown. And because we had such big numbers last week It's really got to be this week and next week and maybe the following week, pending on if people were quarantining themselves, giving us that full 2 weeks of being quarantined. So, with that said, I'm in a wait and see mode right now. Some interesting articles that you're going to look at me and go, Kevin, you can't find more diverse articles. Goldman sees a 15% jobless rate and a 34% GDP decline, followed by the fastest recovery in history. Guess what? We're not at that jobless rate yet. We're not at that GDP decline. We still have, under this publishment, we still have 4 to 6 weeks of our economy and our markets getting pummeled. Another leg down, another massive decline. This is the doom and gloom one. You want a doom and gloom one? This is it. Already, this was last 29th. This was last Wednesday. So some of these numbers will no longer work for his thesis. But I kept it in here because of the historical markets perspective and how long it took to recover from them. If you ever wanted to take a peek at bear markets, I love this gentleman's putting it all together. This is where it's at. You can kind of put ours in there on where you see it. It is not in there yet. So this is for you to do your own math and see where we should be. I then follow that one up with worst yet to come on auto sales for those of us that own Ford or General Motors. Obviously, I'm not a fan of the Chinese. They're obviously not being honest. And then the market recovery sooner than most expect. And this is your best case scenario. This is unbelievable as you go through it. And you're going to see him bring up some comments that you're going to sit there and scratch your head and go, huh, maybe we do have a ridiculous return coming. So the funny thing is, someone always tells me, well, Kevin, why are you giving us both sides of the story? Why are you confusing us? And the question is, really, it's just giving you guys an opportunity to see both sides of the story. And I'm then letting you guys make your best educated decision. We probably are going to fall somewhere in the middle. But wow, as I read some of this, it just goes to show you that interpretation of the graphs are 100% interpretation and opinions. You can even have numbers and use all these numbers to tell you any story you want to. How they see a peak, how they see the downhill slide, insider buying. I mean, there's so much garbage in here. It's unbelievable. Visa and MasterCard. Why? We definitely got to get you guys into Visa. It's obviously an amazing buy. I think Kramer also thinks it's good. And that's our decision. I mean, our decision here is when do we start going full bullish? How the hell Boeing led the market today when they have no U.S. factories making anything? I don't know. I got an interesting question. I'm going to type it in. If you don't trust the Chinese, why do you invest in Baidu? Baidu. And so that's easy. It's like finding a weakness in someone. You're an idiot if you believe China. You're an idiot if you think they don't hedge their numbers and cheat. That is their MO. But the neat thing is, if they hide their numbers on the way down, they're usually going to overinflate their numbers on the way back up. Why do I invest in Baidu? Because I've had some people in it from 135 up to 775, a 10-for-1 split, sold off half, and we're on our way back up. I do think Baidu has been one of the more honest Chinese companies, but they are probably the only one. And they have a 12-year track record of doing it. Well, what about Alibaba, Tencent, and you could name a dozen other ones, right? I haven't seen them do what Baidu's done. I haven't seen their numbers like Baidu. I don't follow them like Baidu. And one of the things you got to understand is Baidu is owned by a lot of government officials. So they're the first ones on the list to get the outside help that might be needed. Whereas some of these other Chinese companies do not. If you're someone in how do I say it? If you are someone in China on their main 7 provinces, you definitely have Baidu in your portfolio. In which case, you're going to make sure out of these trillions of dollars that Baidu gets the money. So that's why I do Baidu. Any other questions? Start typing them in now. We have one from Lance. Give me a quick second, Lance. I'm going to take a sip of water and I'll answer your. So, Kevin, when exactly will you pull the trigger? And we've been pulling the trigger through the downward movements, but to just, I don't know, to just point something out would be my best answer to you. To just point something out, I don't have an exact answer. Once again, we're going through an unprecedented first time in history. So here we're watching history unfold in front of us, and I don't have a time frame for predicting history. I just don't have it. It's not there. I'm not sure what to tell you, to be 100% honest. What I do know is that this week, well, what I do know is right now, I've got 245, like 297 altogether, bear puts that right now on average are 100% paid for. So we've got $14 of downside protection from 254 down to 240, 100% paid for by the shorts. And I have another week to gain some credit. So what I can tell you, on the next down day, I need to pull the trigger and take this into some more profits. Maybe up to a 245, just maybe out the week. I would love another $2 to $3 of profits there. I do know that last week, I think it was on Thursday, we had Under Armour come and hit 750, 761 actually. And we started pulling the trigger and buying stock between 761 and the 780s. Took our profits and off we went. Under Armour now is at 35,500 shares. And they have a possible earnings the end of April. Probably won't happen that way. We tried to protect ourselves out that long. But if we get up to Under Armour, down a little bit lower, if we get up to that 950 range, I thought it was $10 actually. We need to look at rolling our protection up. And let me lower this to a 6-month chart. It is, it's $10. $10 to the 960 to $10 range. We need to be ready to add our protection to roll it up. Our high today was 929, so that's telling me right around 950, we're going to move that protection up. I'm just looking for a couple signals here. I do have April something or other that's going to be expiring. We got that out in time. What is it that we have expiring in April? Facebook. Our puts for our protection on Facebook has to be adjusted. And in which case we might also look at some calls and do a little dollar cost averaging there, which is amazing because if you take a quick peek, what costs $350 is about $109. We could do some dollar cost averaging right there on Facebook. We've already dollar cost averaged January 220s, $28 down to $20, $13 cost basis. The January 225s, those are going to need to be next. A little dollar cost averaging there to lower that down from 225. Boy, I'll lower it down to about $17, right? Disney, we did some dollar cost averaging. We look good there. 97, we picked up more shares on Disney, now trading back to that 99, but couldn't stay above 100. Little disappointing. Did a good job dollar cost averaging on Costco. We're now profitable on Costco, but it really hasn't moved as much as the other things have. Boeing's the next one for dollar cost averaging. We did a great job on a lot of their leaps. Just need to be patient. We could do a little bit more on the 90 350s, but we don't want to be too far into it throwing good money at bad. So the short answer is I don't have an exact time frame. I'm letting the markets tell me. I'm letting the markets tell me where the next leg will be going. Dr. Gupta gave me a text and we bantered back and forth. I can't believe I just turned that off. He noticed a 1 week or 3-day trade way down at 230. You could possibly get filled on a $20 risk bull put spread that was literally like 18, 7% out of the money, maybe 9% out of the money. As I looked at it and I tried to get that filled, that just didn't get filled for us today. It was an opportunity, but as I was trying to see if out of the money 1 week spreads were an opportunity, no, I wouldn't suggest everyone takes $20 of risk for 65 cents of credit. But if you are a high risk, high reward kind of guy, you could find this opportunity. It's not really the best opportunity, but as I was looking at some orders, 42. and now it's only worth 7 cents. So I could have gotten filled at 21 cents, maybe 20, maybe 18, and had 11 cents in a day. Just not needed. It's just not a needed position to be in, and it's a little bit difficult. So that's that answer. Any other questions I can answer for you guys? And for the question on Baidu, I would, in some way, shape, or form, I think we're becoming a global economy. So I'm looking at some way to participate in the second largest economy in the world. And since they aren't that honest, you've got to just be smart. Interesting. It's just interesting. All right. If I don't see any other questions coming in, guys, have a wonderful evening. I'll work on getting this up and posted tonight. I will look forward to seeing you guys tomorrow for a trade findings and adjustments, and we will go from there. Guys, have a wonderful, practice your gold shot. Have a wonderful evening, and we'll see each other tomorrow. Good night, everyone.